right, so interesting week last week. We had what was interesting about it, we knew we had quad witching coming up. We knew we had some important some economic numbers come out, and we knew we had S&P and IWM rebalancing happening towards the end of the week. And we also knew we had seasonality being what it typically is. And so with that, markets did not disappoint. We thought maybe there would be a bucking of the trend a little bit, but definitely some weaker action in here. So let's take a look at the SPY first. If we go to the SPY here, it did close below its 50 moving average. We are below the 9 and the 21. So definitely weaker action. You can see definitely a distribution day given the volume that we had. You can see RSI, while not completely in the red as far as oversold, getting pretty close to being oversold in here. What's interesting is, if you go to the weekly chart, we haven't had 2 straight down weeks in a while. So, it's been a while since we've had 2 straight pretty heavy bar down weeks, and that's what we've seen in this market. So a little bit of a change of character. If you look at the weekly chart, so it's going to be definitely something going into next week to keep an eye on. The monthly chart, which we are a little bit more than halfway through the month, is definitely not shaping up to be a good bar, but that's okay. Let's see how we finish off the month. And again, even for where we are on the SPY coming down, from its peak, if we kind of look in here, we're really, it's not going to show me, is it? It's going to be off the chart. We're really, down what, about 3%, from its peak in here. So not too bad, not too bad. And again, the market kind of needed it. Our spidey senses were going off a little bit 2 weeks ago. IWM, the market, I don't see the market falling apart completely. Small caps did have a green day on Friday, kind of held above the 50. All the moving averages getting tight. Small caps have the 200 as support right under here, as you can see. So some nice action in the small caps as far as holding up in the middle of this zone here that it's been in since the beginning of the year. So that tells me that, again, that strong action in the small caps definitely is keeping us afloat, and that we're not going to fall completely apart. As far as the Qs, looking a little bit weaker, other than, it's not down to the 50 yet, but they are kind of down. And really the level to me for the Qs, if you look at this level here, this was a weekly high, this 369.56 a couple weeks ago. And this high is kind of a flat top breakout. So, if we were to look at downside potential on the Qs, to me, it would be down to this level here. Okay, so that's where I would expect that action to come. And again, you know how I love to have several different areas of support in the same area. You can kind of see that area of support that we're looking at right here from that flat top breakout, and also from the 50 SMA. So again, nice little pullback in the markets. Nothing really to write home about, nothing to be worried about as far as the market falling off its axis. The one thing, though, that I will say, typically on a quad witch, you typically get a little bit more balancing action, because what happens is you get a lot of different players defending different strike prices. Okay, and it all comes back down to options, and we're going to get more and more into options as we go forward. But typically, you get a little bit more choppier action, a little bit more balancing action. But what's really been interesting, and we really didn't get that, you can kind of see these levels really played well. The levels we have are playing well into how we're really managing this market. And if we kind of expand this week out here, and let's see if I can maybe kind of make this tighter. It's not going to let me do it. Okay. We know now what to kind of look for. So what we're going to look for, and we still need to be on guard, is that they've kind of been popping them and then dropping them on the open. And that's pretty much the fade action that we had all week. As far as, we would close down here, we'd pop up as far as futures were concerned. And again, little pop up and then they drop them down. And if we continue to go in, pop up, drop them down. Even into last week, it was a pop up and drop them down. So a little bit of a change of character in the market. But I do want to go to the hourly chart. I want to show you guys something. So pretty much all week, we were in balance. Okay, this is, you can see right in here, we were pretty much in balance here. And if I was kind of draw a chart on the hourly, the balance that I was looking at was really here. Okay, so we were in balance here, and it's a high volume node that we had really developed back through the past month, and we broke that bottom of that balance level right in here. So, we had a touch here, and then Friday it was a break of that balance level. We did kind of go down. So typically the way market structure would work is you would get, some continued downside motion down to here. So I don't know that we're going to get that again. We do have, going into next week, we have a Fed meeting on Wednesday. The meeting's the 21st, 22nd. So Wednesday it's a Fed day. And so we're going into a Fed week. And as you guys know, we really don't put in a lot of heavy positions going into a Fed week. So you got to be very careful, with the action going into that. And I think that might have had maybe some additional play going into what we saw. Now, as far as other things to look at for the week, we do have PMI on Thursday. You have housing starts for August. You have new and existing home sales hitting the tape next week. And then you also have some other central banks, such as the Bank of England on Thursday is going to be talking about rates and going to be talking about, what's going on with the market as far as inflation and what they're potentially looking at. So that's definitely going to be something to keep an eye on. But one of the other things, and we've been kind of beating this drum, and I haven't really heard many other people talking about this. It's gotten maybe a little bit more in the news last week, but we've been talking about the Evergrande situation over in China. Okay, you're talking about $400 billion asset. It's basically the Lehman Brothers of China. They're going into default this Thursday. They have about $83 million interest payment due. They're not expected to meet that. So the question's going to be when you're analyzing that, because going all the way back to long-term capital, to back in the 90s, you got to be careful with these huge implosions because they have a ripple effect through markets and not just China. So you got to be careful. And the big question is going to be, does China step in and basically provide a floor and provide some kind of scheduled bailout? So that's going to be important to look at next week, because the worst case scenario, just complete fire sale. We will definitely see ripple effects over in this market. So be careful. That's something to look at going forward. We also, the House votes on the debt ceiling next week. That's something to keep an eye out. We're getting towards the end of September. They really got to get that figured out. The Republicans, again, there's so much rancor between the different types of parties that, they're just not really, either party is really not looking at the best interest of what's happening with the country here. And so that battle could be a big issue. So expecting a vote on that. You got the huge infrastructure bill, the $3 trillion bill, which, our view, if that's passed, just going to crush the markets. Right now, don't expect that to be passed, but you never know. So you got to keep that on your radar as far as that's concerned. And the interesting thing is, what's really held us up, guys, has been the strong earnings from the companies that have reported. And what we've noticed going into the end of the last earnings cycle was we started to see some misses, and we started to see some forward guidance being pulled back. So we've been talking about how a lot of the economic reports that have been coming in over the last 30 days have been weaker, missing reports. That's been good for the market because then that pushes that taper talk off. But eventually this is where it's a cycle, though. You can't get around it. Eventually, though, that will filter back down to corporations, to their bottom line and to profits. So, starting with Sherwin-Williams, we did see some forward guidance kind of, and kind of pulled back. That will be an issue for the market going forward. So the next earnings season, which is going to be definitely something to keep an eye out for, because what's keeping this market afloat is the fact that we've had, a floor on risk with the Fed stepped in. You got liquidity just, out there, tremendously out there. We've had, we've had great earnings. But there's some things that and interest rates kind of stayed in check, but there are some things out there that we have to start worrying about, which is the margins for companies, because again, we have the supply chain problems. We have the wage pressure, wage inflation now starting to prop in, and we're starting to see some pricing pressure for companies, and they're starting to pass that on to consumers. So you do have some narratives that could affect earnings and margins going forward. And if it does filter through into the next earnings report, then it's going to be trouble for the market. So that's what you need to look at from a fundamental perspective going forward. Okay, as far as moving forward, looking at the rest of the market. So if we look at rates here, rates, finished close to the high end here, look like their potential above the 200. Moving averages kind of tightening. This is the 10-year. Not really, out of control. They're kind of just in this little chop zone, but it looks like, we get above 1.4 and we start running pretty, they could have an effect. So the fact that rates are kind of holding up, and if they start run, could be an issue, especially for tech. Looking at the dollar, sorry guys. Looking at the dollar, just strong break out of that, momentum, out of that base rate in here. Strong break, strong close on Friday. So the dollar starting to run up into the Fed meeting, which you would kind of expect the dollar to run up into going into a Fed meeting with, where we're starting to expect taper and stuff like that. So dollar, though, holding up strong. So again, the dollar's telling us that we're just not completely falling apart. Rates are telling us we're not completely falling apart as far as a crash yet. So we do have some warning signs. You got long-term rates, trying to get back above this trend line, trying to get back up in here, starting to try to play a little catch up. So again, interesting that rates have kind of popped up a little bit. And then you also have another bullish thesis in that, you have oil, did pull back the last 2 days on lighter volume, but you still have oil, back up close to the upper end of this range. Looks like oil's getting ready to run again. And so again, for a bullish thesis going forward, strong oil is important. You have rates still kind of, not falling apart, which we don't want to see, but also not running rampant, like, could also, it's kind of like the Goldilocks issue with where we are at rates, and the dollar strong. So, all of that tells us from an internal standpoint that the market is not going to implode anytime soon here. But again, it doesn't guarantee anything. This is a unique market. We've never had, we've never ever been in this situation before where we've shut the economy down. It's just like a patient on the table when you shut their heart down to do bypass surgery, and then you try to bring it back up. You never know what you're going to get. Same thing here with the market. So, but looking at the odds, looking at the indicators, looking at the internals, things are looking okay for the market. And from a seasonality standpoint, look, the next 2 weeks, should be They're typically the weakest part of September. So it's going to be interesting going into the next 2 weeks. But then we go into a strong seasonality standpoint for the market, and that'll be something to keep an eye out. The Fed meeting, again, don't expect them to announce a taper at this meeting. I think, with where the labor market is and given Powell's target, labor market's nowhere near where it needs to be for them to start their taper. We still have our expectation as a fund, the taper starting in December, in the December 14th meeting. But, again, we'll be on the lookout, the market be on the lookout for any wording, any changes in perspective for what we get. And of course, the question and answer session after the meeting is probably the more important section. So that's where we are. We're not going strong into this week, even though we've had a pretty down week. If you look at the SPY going back to this, we're back down to the buy zone, guys. So look, all throughout here, we've circled this out, right? Down to the 50, nice little ramp up. Down to the 50. This actually traded one whole day through the 50, a ramp back up, down, closed at the 50, ramp, run. Here we closed, here we came back down for a second test after popping up a little bit, run right up to highs. Here down to the 50, up to highs, down to the 50. And then we've had a nice little extended run, almost touched the 50 last time back here in August. But now we closed below the 50. But to me, I'm not ready to just say it's Momentum Monday because, it just seems like a different type of character. So, for me, if we step into Monday and, we see futures, shooting up, which you very well could, because you got to realize the quad witch is over. A lot of that pressure has been taken away, okay, that we were worried about last week. So that will alleviate a lot for a lot of institutions going forward, but you still have that cap of a Fed meeting on Wednesday. It's going to cap some people. So what I'm going to be looking at, you're never trying to catch the bottom, even down here with this nice consistent pattern. I don't want to be the one trying to catch the bottom, okay? Because, you get enough of a run up off of the bottom. You want confirmation first. So what are we going to be looking at? That first 10 minutes. Does it hold the opening print? Does it hold its moving averages? The moving averages are getting tight in here. So, but this was pretty strong volume into this week as far as the distribution volume. So it's going to be interesting to see how we react going into that Fed meeting. So we're going to be prove it to us first, and that's why we've been able to stay in the markets as long as we have. All right, that's enough of that. Let's go look into stocks that we were looking at. I tell you, we've been doing really well. So the stocks we were watching last week still continue to outperform in these markets, right? So we had Crocs that we talked about. Nice little breakout last week. Nice run. You got this nice little flat top here that it broke out, and you can see retail sales did surprise to the upside, but not all retail companies responded positively. Crocs, one of those that did, continues to roll, and a big winner for us. Boot Barn kind of breaking out of a little congestion area in here, doing really well. And then a stock that we did trade, which was Deckers, also trying to continue. And Deckers tried to really trade above in here and break out. So it looks like it's a breakout mode, but we'll see going forward. So retail doing well. And again, our thesis, Apple, we told you guys. The fundamental thesis that works really well in trading Apple, you buy the rumor going into the product event in September, you sell the news. Well, the product event, you could see what happened. They just completely sold it off and keep on selling it off. And now, if you look at Apple, Interesting enough, we had a little head and shoulders pattern in here on Apple that we traded, had nice little consolidated value zone that it then broke back out of. Nice little consolidated zone in here, broke back down. So Apple, interesting how it trades because it's a lot more institutionally owned. But here, looking like another head and shoulders pattern kind of forming as it's back into this base of the head and shoulders. So you got a shoulder here, head, and then it looks like it's developing a shoulder. So going to be looking at this sideways action in Apple, close below the 50, definitely weaker action. So, but if you had followed us and how we traded Apple, it was a little choppy up into the news, but we were able to take a couple trades, make some money on that, and it performed very well. And we were out of this. We didn't try to buy the dip here because if you tried to buy the dip here, you're already down again. So, again, you're not trying to catch that falling knife. You want to buy strong stocks, not weak stocks. So Apple, kind of, looking to me bearish, and that's kind of the thesis that we're going into the week with on Apple. On the other hand, Microsoft has been a good player for us. It was a nice little breakout, buying the break of this little trend line in here. It did pull back on Friday, but of the Bang Gang group, I still like Microsoft going forward. If you look at the monthly chart on Microsoft, just nice break out of this base, has been a good little trader for us. And you can see it looks a lot different on the upper time frames. That's why we do this, right? You look at the weekly chart, looks like a little flag in here. So not bad from a weekly standpoint. But again, you kind of got this, you got a top here, and the top here. So it needs to be able to break those tops. Going back to some of the other, looking at the FANG stocks, Amazon, kind of holding in there, not falling apart. This was an interesting value buy opportunity right here below the 21, but not something we're really looking to trade right now as far as that's concerned. Google below the 21, looking a little bit weaker, kind of pulling back at it. Google has not closed below the 21 since back at the beginning of the summer, so it's definitely something to take into consideration in there. Tesla's still grinding its way. Tesla's interesting. Tesla's interesting in the fact that you kind of got this flat top in here. Okay, so definitely of interest on us right here. A break of 762.17. I like that if we can get that. So Tesla definitely not as weak as some of the other stocks. You look at the monthly chart, you can kind of see doing this little V shape. It's got a little bit more room to run. And you look at the weekly chart, you had kind of a, I forget what they call this, but, like a gravestone right here. And, this is typically a reversal candle, but, we had a nice wick candle now to close strong on the week for Tesla. So I completely reversed that candle from the week before. So Tesla looking strong going into this week, and it probably would be a stock that, I would be looking at. Some other stocks that we were strong into last week and had some good trade-ins. EXPI, we played this breakout. It consolidated. I talked about the value zone in here, gave you a nice 2-day breakout here. EXPI looking strong, had some nice increased volume, and you can kind of see hourly chart kind of wedging up here. You can see this break that we talked about out of this zone proved to be a nice low run, 7-point run for us. So nice trader in EXPI. If you come back, if you want to look at the upper time frames, monthly chart kind of shooting that V again, working on a wick down to the bottom. Weekly chart, nice strong week for EXPI, closing near the highs. And you got to remember, got to look left as we always do in this chart. So there's a lot of heavy congestion in here. So let's see, let's see it really, if you look in here, the volume not as strong as you would expect to kind of break through here. So we're going to need some volume possibly to break out and stay out of this zone. So that's what you're going to want to look at in EXPI. I'm not sure, I forget, it's bad. I forget if I brought up Netflix again, but Netflix, nice little dip down to this zone down here, kind of bouncing back. So it's interesting look on Netflix going forward. So I did want to pull that up if not. A couple other stocks that we traded that's still looking strong this week. Upstart, Upstart continues, man. I mean, active sequence. This is what you're looking for, guys. Pro gap up that holds, and when you get these pro gap ups, what you'd like to see is this huge volume. Okay. And a pro gap is a gap that on huge volume that holds, and it's at the top of this zone here. Okay. If you look left. So when you see that hold, you see the traders come in, and that's what I'm talking about. And that's, you need to see that volume pop in, right? Because that's what that gets a lot of traders to the table. And then you have a nice little active sequence, from this 170 all the way up to 303. So nice run in Upstart, nice active sequence. The 9 has been a nice value zone. And just a good trader. It continues to be a good trader. And, it's kind of like JMIA was for us last year, Fuel Cells, SunQ. Upstart has been our ATM machine this year, and it's doing well. And can expect it to continue to do well going into next week. If you look at the monthly chart, nice little 2 months. Now, it is a little overextended. I will definitely agree on that. Look at the weekly chart, just seeing these step ups in here. And you look at the hourly, get a nice little flat top. So if I am trading this, I'm trading it based off this 291.62. That's my stop loss area. I don't want to see it fall back below there to keep this breakout up intact there. So another stock that, continually to trade, continue to kind of grind is Home Depot. Don't like the wick, but again, on the daily chart, these wicks don't mean as much. But again, if you look in here, interesting kind of area that it's trying to break out of here, and you see you got these it's jamming itself up into here. It's kind of where you kind of had this open here from this gap down. We traded Home Depot all the way up in this nice active sequence here. It was a great trader, beginning of the year. Traded this breakout. We traded this breakout. And it looks like, again, it wants to get going. Had nice, strong volume in here. If you go to the higher time frames, monthly chart kind of flagging in here, weekly chart, again, just like the week before, kind of stacking itself from this breakout in here. So still looking good, still like Home Depot going forward. A couple other stocks that, we've looked at and traded the last 3 weeks is Datadog. Proved to be good value down at the 21 here. Still held up on Friday, a little bit, a little bit later volume in here, so I'd like to see it continue. But Datadog still looking good. DigitalOcean is one that we brought up to you guys almost every day last week. It was a good trading run in here. Friday inside on heavy volume. It needed inside day, get overextended. If you look at our oscillator on the hourly chart, it was overbought level 2. Now it's oversold level 1, so I think it could be ready to continue its ascent. But this has been a great trader up in here on DigitalOcean. Let's see, ISEE, we played this ISEE, we played this all last week. Just really, again, another pro gap that you can see right here, kind of holding its own, still holding its own. Don't like the fact that the volume just got that kind of just falling off. So I'm not sure that the volume's going to have to be there for us to continue. Another stock that it seems like we're just becoming an ATM machine for us is this SE. Proved to be good value down here in this zone below the 21. It's kind of holding up here, getting a little flag. It looks like it wants to get going. If you pull up the monthly chart, kind of working on a doji there, still working on that candle, so nothing of concern. Weekly chart, again, kind of flagging, holding this breakout level, trying to get back up towards the 360 and get it running again. So that's SE. Other stocks are looking good as Zoom not Zoom, but Zoom Technologies. Again, kind of like Datadog in this active sequence, kind of just grinding its way up here, holding in on the 9. 21 has proven to be nice value zone in this active sequence from this breakout, and it continues to run. These are the type of charts, guys, that you want to buy, not charts like this. Okay, Las Vegas Sands. I don't want to touch charts like these, right? Baba, you know, I mean, look, people were, think Baba's going back over 200. I remember traders trying to convince me, Mike, the Baba's going back over. It got over 200 here, and I saw people kind of it was wedging in and kind of get suckered into this candle, and then now they're down 50 points. That's these are not the type of charts that you want to buy going forward. So just, stay out of those charts. These are the type of charts you want to look at, right? MTTR, look at this nice little break out of this base, had a good week. It had a little flag in here. Good week, continues to run. So take a look at that one. Let me see. PLTR finally looks like it's breaking out. Looks like it wants to confirm in here. This is one that you just got to be careful. This one, because if you look left, this was actively in play. A lot of traders got stuck up in here. We know some of those traders. So these traders, you have some overhead resistance in here, but it is starting to act better. Volume is increasing, which is what you want to see. We're back above a really important level right here. So the fact that we're able to close strong, and again, you got strong volume to close up here, and then had a little doji resting day right here, which is pretty nice. So PLTR, we're going to see if that can hold its area from the breakout zone. As far as energy, I still like this DVN. Devon Energy, we kind of called this breakout here of this daily trend line in here. It was a nice trader. Now it's kind of flagging in here. You're kind of wrestling with the top. So if you want to look what this stock is doing, it's kind of wrestling right in here with this top. So you got kind of rejection here. You got a rejection here. Let's see if I can get this drawn. You got a rejection here. So, what you're going to want to see is this to hold the 9 and 21, and then a nice big volume, big candle breakout above, should be good. But, from the energy sector, I like this DVN. I think it's a good trader going forward. So it's definitely one that we're going to be looking at. Another stock, not in the energy sector, but this INMD in mode continues to be strong. It's more of a swing trading stock, not a day trading stock. So if you're looking for something like that, could be interesting. Lithium continues to be in play. So, we talked about this. I'm sorry, I put the right symbol up. This LAC, this is Nick's stock, definitely performing better than the one I was always trading, which is LTHM, kind of holding that zone. You can kind of see. So LAC looking good. Also, this SLI looking pretty good as well. So lower price stock. So lithium looking strong. And again, we've been kind of on these stocks ever since the Afghan situation, because, they have a largest, China's really controls lithium, but, the largest untapped resources of lithium is over in Afghanistan, and America just walked away from it, could play into the markets, and they kind of been running ever since. So it's been, really good traders for us. A couple other stocks, then we're pretty much done. SDC, Small Direct Club. We traded it in the past. I've, had some good trades. Interesting action here. Huge volume on Friday. RSI is kind of uptrending. It's interesting that it, kind of tapped out right here. Okay, and then pulled back into this area and kind of found support here. So, you're going to want to see it hold and, maybe get a big bar and continue. It is above, it gapped above the 50. It's still above the 50. You got the moving averages getting tight, starting to pull up. And you got a long ways away from the 200, so you could still get some action into this trade going forward. So it's definitely something to keep an eye out. We're also going to keep an eye out on this ATER. We traded it here. We talked about it, 200 being a lid here. They pulled it back. Kind of got some action in on Friday. Interesting stock, kind of like Smile Direct, kind of getting some action, kind of coming off the bottom. So, day trades only, and, this could be a good day trader going forward into next week. EXPI, interesting stock, again, kind of tightening of the moving averages here, kind of wedging in here. So we've traded the stock in the past. I thought about taking a position, didn't do it. on Friday. It's kind of wedging in here, looking for a possible squeeze and then break, and then continue going forward. But that's really it as far as, our focus going into this week. Again, we're pulling off the accelerator a little bit. We're not short-term trades only. Again, we're not really having huge portfolio positions because we are below the 9 and the 21. We're also below the 50. So that tells us, okay, we are going to be a little bit conservative until we start seeing better market action. Doesn't mean that we stay away from stocks. It just means that we change our trading strategy. We're not trading as much. We're going to go high A+ setups, and we're going short-term trades only, not keeping a lot of overnight risk, though we will keep some. So interesting. It's going to be an interesting week in the markets. If we can get through this Fed, then we're going to be lined up to run into earnings season. Next week, we do have some earnings from Nike. Who else? We had Nike. Costco has earnings, and I believe there was 2 others. Who else? It was Costco, Nike. Who else was I looking at for earnings? Completely escaped me. I'm not sure. But pretty much, yeah, I'm not looking for anything. Oh, I think FedEx does. So, FedEx has earnings, and that's definitely one that we watch from this is an important one for us. Okay. Because we look at the shipping companies as a barometer on the retail consumer and a barometer for the markets. So we'll be looking at FedEx earnings. We won't be trading FedEx, but I like to see a recovery in FedEx because I think that's important for the marketplace. So we'll be definitely watching it. But, again, Nike's had some supply chain issues. And so that's why you're kind of seeing a pull back from its little hump up there to over 170. And I expect they're still having some supply chain issues. Costco had just been in this incredible run, finding value at the 21. So, but again, this was the time to buy Costco. We missed it. This nice little flat top break here. Active sequence typically happens. This is what an active sequence looks: 391 to 470, guys. Look at this. This is why we changed our philosophy to do a little bit more portfolio trading, because this is just a nice little active sequence, nice little run up. But that's it. Hopefully we can get through. Just be, again, you want to protect your profits through this period of time. I mean, let's face it, prior to the last week and a half, we've had great trading, great returns, just A+ super setups. It's just been a really good market. Now we're in that period of time since last Thursday, Friday, not this past Thursday, Friday, but the week before, where we've had this weakness develop into September, and we're heading into this Fed meeting. And so, I think you're going to want to just keep your positions light going into that.